Wunderschönen guten Tag, meine Damen und Herren. 7. deutsche Rohstoffnacht im Rahmen der Invest, leider virtuell, da die Invest wegen des Coronaviruses ja ausfallen musste, wie bekannt. Aber nichtsdestotrotz wollen wir Ihnen natürlich unsere fantastischen Unternehmen nicht vorenthalten. Heute bei uns Skeena Resources und ich switche jetzt um auf Englisch. Ladies and gentlemen, Skeena Resources here for you. We have Kelly Earle today here, the Vice President of Communication for the 7th German Resource Night, and she wants to give us an insight into her terrific company, of course. Kelly, welcome. How are you?
I'm well. Hi, Jochen. Nice to see you.
Nice to see you. That's fantastic. Unfortunately, not personally, because otherwise we would be in Stuttgart now on the stage and afterwards having a lots of fun at the hotel bar. But it is unfortunately not possible. We know that all, but hopefully for next year we can do it. Yeah, so Skeena Resources, fantastic company. You guys just raised $33 million in those markets. Congratulations on that. And I think every drill hole hit so far, and your results are really, as I love to say, super outstanding. And you guys have done really an exceptional job. And with the Eskay Creek project in the Golden Triangle in British Columbia, you guys will have probably one of the next big mines there. And you have a nice agreement here with Barrick, which you will, I'm pretty sure, tell us in a second. So if you like, I can start up the presentation now, and then please give us a lovely insight into your terrific company.
Sounds good.
Super, thank you. Let's get started. Voila, here we go. Kelly, the floor is yours.
Thank you. So welcome, everyone. Thank you for joining me. I'm going to focus on our Eskay Creek project, as Jochen mentioned, in the Golden Triangle of Northwest British Columbia in Canada. Some forward-looking statements here. So this is our project location. Skeena actually has 3 projects in the Golden Triangle. Eskay Creek is really our focus. Snip is another high-grade past-producing mine that we acquired from Barrick. And then GJ, which is the project up to the north, is a copper-gold porphyry. We're actually looking at selling that project as we speak. And we announced a deal with Newcrest Mining. Newcrest bought a stake in the Red Chris mine, which is just to the north of GJ. So we'll be selling that for $7.5 million in cash, and that's expected to be done by the beginning of May. So we'll have even more cash in the bank.
Wow.
So I'll quickly just touch on management. Walter Cole's our CEO. The entire management board's new within about the last 4 years. So Walt joined just over 4 years ago. He's an investment banker by background. Our VP of Exploration, Paul Geddes, left Barkerville Gold Mines a few years ago to come join us. He was also instrumental in Rainy River, so a great resource definition geologist. I'm a geologist by background, but I do all the communications, investor relations. We have a VP of Sustainability, Justin Himmelwright, which I think a lot of people think is odd for a company our size, but it's really key. We have 2 past producing mines in Tahltan territory. That's the First Nations group that we work with. So it's very important that all environmental, permitting, First Nations issues are looked after, and that's what Justin takes care of. On our board of directors, Craig Perry is our chairman. I know his company, ISO Energy, also
we know him well.
Resource Capital. So he stepped up to be our chairman about a year ago. He's one of the co-founders of NextGen and EMR Capital. He's really helped push us in terms of getting some coverage. Borden Putnam's our geologist on the board. He's a former analyst and advisor to several funds. Isaac Bernstein's represented from Hochschild. They have an option to earn a 60% interest in our Snip deposit. And then Suki Gill's our accountant on the board who runs our audit committees. So I'm going to jump into Eskay in a second, but first I just wanted to touch on the infrastructure in the area, and I'm going to try this whiteboard tool, Jochen, if it works.
Sure, do it.
We've got Highway 37 and the Northwest Transmission Line here, which goes all the way up to Imperial Metals Red Chris Mine. And then within the last 7 years, we've had 3 hydroelectric facilities built right in between Snip and Eskay Creek. So these mines, when they were in operation in the 90s and early 2000s, were very remote, fly in, fly out. Diesel was all flown into site. 50% of the operating expenses at Eskay Creek was diesel. So completely different now that we have 6 cents Canadian per kilowatt hour hydroelectric power. That's just 8 kilometers down the road. So it completely changes the cutoff grade at which we can mine. So let's jump right into Eskay. This is what former highest grade gold producer in the world when it was in production from 94 to 2008. Produced 3.3 million ounces of gold, 160 million ounces of silver at 2.5 ounces per ton. So staggeringly high grade. Because the mine was so remote, The price of gold was so low when it was in production and it was all diesel powered, it meant the cutoff grades were extremely high. So when the mine operated, they were just doing direct shipping ore until the mill was built, and it had a 30 gram per ton cutoff. So anything below that was waste. Then once the mill was built, the cutoff grade dropped to 15 grams per ton. So our thesis in acquiring this project from Barrick, for optioning it from Barrick, was pretty simple. What was left behind that was not economic when the mine was in operation, that would be more than economic now because of the vast improvements in infrastructure and the much higher price of gold. So I want to touch briefly on the Eskay Creek option terms. So I mentioned we optioned this from Barrick. That was in December 2017. It was a 3-year option. First hurdle was a $3.5 million commitment for exploration, and we spent that within about the first 8 months. The next hurdle is the purchase. So the option will come up December of this year. Then there's a $10 million purchase price to Barrick, and also we have to post an environmental bond, which is estimated at being $7.7 million. But we understand that bonds can sometimes go a bit higher than they're estimated. So we worked out a deal with Barrick that if the bond goes higher than 7.7 million, our purchase price goes down by that amount. So we're locked in for 17.7 million. The last piece is that Barrick does retain a back-in right. So once we own the project 100%, once we exercise, it triggers a 12-month window where Barrick can come back in for 51% by paying us 3 times our cumulative expenditures. So we've spent about 20 million to date. We have plans to probably spend between another 40, 50 million this year. So say we spend $60 million, that would mean Barrick would have to come in for 3 times that, 180 million, for 51% of the project. Plus they'd need to pay a 10% management fee, plus repay the $10 million purchase price and post 51% of the bond. So we realized that this is a bit of a hangover that's left on the stock. So we've gone to Barrick to try and sort this back in right early, and they seem amenable to the idea. They've done a technical review, and we're in talks with them right now to see if we can extinguish the back in right, either by paying them more cash or by giving them shares in the company so they can participate in the upside as we move this forward. So that's in the works, and we hope to have that sorted out by this summer. So this is the current resource estimate at Eskay Creek that we released last year. Between the indicated and inferred, it's a combined 4 million ounces at 4.4 grams per ton. There's a small portion of the resource that I'll just highlight here. This portion here is underground. There's about 300,000 ounces that are underground. The other 3.7 million ounces are open pittable, and that's the area that we focused on for the PEA. So I would note that if you look at the inferred and indicated, there's still about 14 million tons in the inferred category, and we need to get all of those into the indicated category so we can push forward with the pre-feasibility study. So this is what we're busy doing right now. We're busy infill drilling, and as Jochen mentioned, we've hit everywhere we expected to. It's a beautiful, continuous VMS, volcanogenic massive sulfide deposit. It's very tabular in nature. It represents the sea floor. So you've got rhyolite feeder structures that would come up under the seafloor. When the hot liquids hit the seafloor, they dump out. You get this main exhalative event, which is it's called the mudstone horizon. So there's 2 horizons. There's a mudstone horizon and a rhyolite horizon. So it's very nice and tabular in nature. So every time we think we're going to hit that horizon, we do. So that's why we've had such great success with our drill results. I would also point out, if you looked at the inferred versus indicated, you'll see that the inferred grade is 3 grams per ton, whereas the indicated grade is almost 6 grams per ton. And the reason for this is mostly a function of drill spacing. In the areas that were mined historically, so that would be all this area here where you see the historic underground workings, the drill spacing was very tight. It was at about 15 meters between holes. Other areas, like over in this zone here, and also in the 22 zone satellite pit, which is off here further to the south, these are areas that were never mined historically because the cutoff grades were so high. So the drill spacing in these areas is more like 50 to 75 meters. And when you're working on a resource, as you work on the resource, the further you are from the drill hole, the more the grade has to decrease. There's a penalty statistically to the grade. So in the inferred areas, that's one of the reasons why the grade's only 3 grams per ton. It's because the drill spacing is so large. So as we do the infill drilling and we decrease the space between drill holes, we'll be able to get that grade closer to this 6 grams per ton. So we're at 4 million ounces at 4.4 grams per ton right now, and our internal target's 5 million ounces at 5 grams, and we're we're well on our way there. I'll show you some drill result success that we've had in a second here. So I'll just clear that. So these are the PEA highlights. We put this out in November. We were, I would say, all of management was very, very pleasantly surprised by the results. So it envisions a 9-year mine life, producing a concentrate, producing over 300,000 ounces gold equivalent per year at an average grade of 4.1. We only looked at an open pit option, so this is all open pittable. $638 million after-tax NPV at a 5% discount, 51% internal rate of return, some spectacular numbers. I would point out that we did this at $1,325 gold, and I plugged spot prices of, I think it was $1,750 and about $1,550 silver into our model the other day. And the NPV after tax at a 5% discount went to over $1 billion. And the IRR jumps into the 70%. So
Jesus.
Yeah, when you have a spectacular open pit grade like we do, just a small, increase in the price of gold really changes the economics dramatically. But also because it's such high grade, we're covered on the downside. So this is a project that works at $1,200 gold, it works at $1,000 gold, but it just gets better as the price of gold keeps going up. So I'm going to switch to the next slide here. This shows the exploration potential that's left on the deposit. So everything that you see here in gold is the current resource. All the blue dots are historic drill intersections. I think that's greater than 4 grams over 2 meters. That's what we think would be about the minimum mining width. And you can see the pit outlines here. You can see areas like below the 22 zone, just to the south of it, like this area here. This is not, we haven't drilled this yet. You can see this big circle here. This is a prime target for exploration that's yet to be drilled. And the depth potential is not yet known on the deposit. So I mentioned we've really been focused on infill drilling. We really need to get that 14 million tons into the indicated category because we need all the ounces to be in the indicated category for a pre-feas and then feasibility study. So that's been our focus. So we haven't yet really focused on exploration. I think some of the deepest drill holes on this deposit are only about 250 meters. So amazing exploration potential. And I'll just switch here to the next slide where I can show you some of the successes we've had so far. So this is an area where we wanted to do some infill drilling. So we were following up on these targets here, which I'm going to try and read for you. 45 grams per ton over 23 meters and 59 grams over 6.7 meters. So these are historic drill results. And we were trying to follow up on these to get all the drilling into the indicated category and also to see if we could extend the mineralization. And sure enough, as you can see by these hits right here, we tagged into 27 grams over 9.4 meters and 17.49 grams over 7.54 meters. So not only did we hit the mineralization exactly where we thought we did, but we're also able to extend the mineralization, fill in this gap here. So we get more certainty in the grade and we're actually able to add some ounces. We also did let one of our drill holes drop below the resource pit, which you can see is this line here. We let one of the holes go deeper and we tagged into this spectacular hit, 314 grams over 2.21 meters, one of our best hits to date. And excitingly, it's in a new mudstone horizon. So I mentioned that we had a contact mudstone horizon, that's this area up here. And then we've got the rhyolites that are below it. So this new horizon that you can see highlighted here that goes all the way along here is a lower mudstone horizon. So it represents where the seafloor was, say, 1 million years earlier. So the seafloor moves over time. So this is where the mineralization was dumped at an earlier stage in time, and we get another mudstone horizon. So that's very exciting for us. We don't know the size of it yet. There's a couple historic drill hits in the area, but this is really one of our key exploration targets for future exploration drilling. So I wanted to point out to everyone what a spectacularly high-grade Eskay Creek really is. This chart here at the top graph shows average grades for open pit development stage projects in North America and Australia, and the lower one shows for the entire world. You can see the average is right about 1.5 grams per ton, and Eskay Creek is sitting all the way over at 4.3 grams per ton. So it really is a spectacularly high-grade deposit. It'll be one of the highest-grade open pit in production when and if it goes back into production, which is what we're pushing for. So that's a quick overview of our Eskay Creek deposit. We're busy working on the pre-feasibility. We're about to launch the study. Before that, we're going to just keep on going with the infill drilling. We've completed 4,300 meters to date. of 2020 phase 1 infill drilling. We just released some yesterday, I think it was, that we had some out. The remainder of those results will be out over the next few weeks. There's about 24,000 meters left to go this year after that. So we hope to get back drilling again into Eskay in June. One of the nice things about having road access is that we're able to drill year round at Eskay Creek. So we were drilling earlier this year. We've taken a bit of a break right now, but we'll get back in there in June and we'll just be able to keep on drilling through the winter. So we are about to launch our pre-feasibility study with Ausenco, which is the group we did the PEA with. That'll be out in the first half of 2021, and then we'll push forward with the feasibility study, which we're hopeful to have out by the end of 2021 as well. So we're busy upgrading geotechnical and metallurgical work. We've already started all our environmental permitting processes, and then the next big hurdle will be, of course, to exercise that option and acquire 100% of the project from Barrick. So that's my Eskay Creek update, Jochen, unless you have any questions. I was going to give a brief update on Snip.
Yeah, maybe one question in between. The pre-feasibility study, how much does that cost?
So the majority of the cost for the pre-feasibility study is really the drilling. So as I mentioned, there's this 24,000 meters. There's another 40,000 meters we'd like to do in a phase 2 drilling. So it's really mostly the cost of the drilling. Of course, there's some permitting, environmental permitting studies, things like that. I don't have an exact number for you just yet.
Maybe roughly.
Yeah, so it's probably going to be $40 to $50 million to push forward that once we get all the drilling and all the studies complete. Yes.
Good. Perfect.
Okay. Then I'm going to touch briefly on Snip, which is our other high-grade past-producing gold mine that we own. So we own this project 100%. We did the same kind of an option deal with Barrick on Snip as we did with Eskay. We used the template from Snip for Eskay. So we own this 100% outright. As I mentioned, Hochschild has an option to acquire 60% interest in this project. It was a 3-year option that'll expire in 2021, and they haven't pulled the trigger on that yet because they're looking for a few more ounces. So again, another high-grade past producer, produced 1.1 million ounces at 27.5 grams per ton. Again, it produced in the 90s when the price of gold was low, which meant the cutoff grades were high. Cutoff grade here started at 12 grams per ton and then went all the way up to 24 grams per ton. So we're looking at any material left behind that was not economic in the 90s that would be economic now.
Jesus.
Very high grade. I know you like that, Jochen.
I love it. Honestly, I will buy some stock.
Wonderful. So a bit of an overview on Snip. So it's very different deposit than Eskay Creek. Eskay Creek's VMS, very constant, tabular in nature. Snip is different. It's a narrow vein, high grade and narrow veins. So veins can pinch and swell. So it takes a lot more drilling to define ounces on a narrow vein deposit. It's what's called a shear vein hosted deposit. So over here, we've got this area called the Twin Zone, which is this vein that runs along here. It historically produced 762,000 ounces at 29 grams per ton. So that's one side of the shear vein. We did some drilling in 2016 and we tagged into this hit from surface where we hit 16.24 grams over 13.5 meters. And sure enough, when we started to model up all the historic results, we realized that we've tagged into another shear zone. So now we think we've got two sides of a shear zone. They split apart and we have dilatant veins in between, like this 130 vein here, which produced 26,000 ounces at almost 20 grams per ton. So this area here, this 200 footwall area that we've tagged into, it's called that because it's 200 meters into the footwall. This is our prime target for drilling. And we did some drilling last summer. I'm just going to clear that. We did some drilling last summer. So this is that twin zone projection that I was talking about. This is the 200 footwall projection here. And sure enough, we tagged into 1,131 grams over 1.5 meters. It's our highest grade hit to date. Very excited about it. Unfortunately, as with exploration drilling, this was one of our last drill holes that we did. So we had another drill hole here, but we stopped it short. We think this vein is dipping more sleepily than we thought. So we just missed it. That's the nature of exploration drilling. So this is the key area where we're going to go back in and drill. And we hope to start here in the summer as well. We'll probably do a few thousand meters just to get a better understanding of where that twin zone vein projection is. We don't have a resource out on this project yet. We're hopeful to do one later this year. Internally, we've looked, there's about 300,000 ounces at about 10 grams per ton here right now. So we do need to do some more exploring and more infill drilling to look to build upon that and hopefully have some more of those spectacular drill hits like the 1,100 gram per ton one.
Hope so.
We're also looking at the possibility of trucking the Snip ore over to Eskay. So the projects are fairly close together, and Snip is really nice, clean ore. And we're going to look at if it could blend with Eskay. So that's one of the possibilities we're looking at, or potentially a Snip could even be a standalone deposit on its own, but lots more exploration left to go on this project. So that's my overview on Eskay and Snip. There's one more thing that I wanted to touch on, which is Skeena's relationship with the Tahltan, which is the First Nations group that we work with in the Golden Triangle. Skeena is the founding member of the British Columbia Regional Mining Alliance, which is the first of its kind alliance. It's a partnership between the two First Nations groups in the Golden Triangle, the Nisga'a, the Tahltan, the British Columbia government, the Ministry of Mines, and industry. So the goal of this alliance is to promote mining investment in the Golden Triangle and education. So we've traveled the world with Chad Day, the president of the Tahltan, to promote Skeena and investments into the Golden Triangle. We have a wonderful working relationship, and I hope to have some exciting news to announce to everybody within the next couple of months about an ongoing partnership with the Tahltan. And lastly, I'll just throw up our share structure, 165 million shares outstanding. We're sitting right around 160 million Canadian market cap. We had a wonderful year performance-wise last year, but we've got a long way to go. We think we're pretty undervalued considering we've got 4 million ounces at 4.4 grams per ton. So definitely a lot of work left to go on getting our share price up, and hopefully we'll have another really good year this year.
Absolutely. And I see the warrants are June 2020 at $1, so you probably can cash them in also.
Yes, that's a good point. We had some warrants expire earlier this year in March that brought in some cash, and we've got warrants expiring in June at $1, and we're hovering right around that right now, so that could bring another few $1 million in as well. So cash-wise, we're well positioned currently.
Fantastic. Super. Well, that's a very compelling and yeah, fantastic presentation. And I'm still shocked by those 3.4 kilograms of gold, honestly. That's amazing. And this is actually the area you really want to focus on within the next months, right?
Yes. Yeah. So we'll be back in June. We're hopeful to start drilling. I think we're still sorting out if we're starting at Snip or Eskay first. But yeah, that 200-foot wall area is exactly where we'll be drilling again. So I predict some more super high grade coming out.
So overall, we can say that you have like 2 mines.
Yeah, well, we have 2 past producing mines, but it's yet to be determined if Snip will be a standalone or if we could satellite it in. We've also had a lot of cash offers for Snip, but we see a lot of value left in that deposit, so we're holding on to it for now.
Well, definitely, because as you maybe have seen, I've done 2 days ago my latest power point and figure analysis on gold, and my next target is like 1880 and then 2440.
That'd be wonderful.
It would mean a lot, I would say. Super. Yes. So that means to me, with your latest financing and maybe also those options or warrants coming in June and the cash you have, you are easily then going to $40 million cash, right?
Over that, because as I mentioned, we're also selling that GJ deposit for $7.5 million. So after the financing, the cash we had on hand, the selling of GJ, and the warrants coming in will be closer to 50.
Super. So that means, because this was the thing I was asking you for the PEA stuff. No, sorry, not for the PEA, for the pre-feasibility. Excuse me. Yeah, for the pre-feasibility, and you said like 30-40 million. So you have that money then. That is important, I think.
We do have the money. I would predict we may do another financing at some point later this year, beginning of next. If our share price continues to go in the direction it has, it might make sense to do another raise. But yeah, it's nice to sit on $50 million and be able to push the project forward. That's
absolutely. And with a rising gold price, don't forget that. Super. Well, Kelly, thank you very much. Fantastic presentation, as said. And we wish you all the best. Have a great weekend. Thank you. Of course, stay healthy. That's the most important thing. And I really look forward to see you then again, hopefully soon in person. And that we can do then an interview personally and maybe have a glass of wine together.
I'll admit, I love visiting Europe, so I'm a bit disappointed that we couldn't come there for this investor night in person, and also a road show we had planned. But I know we'll do it again, and I'm looking forward to it.
Yes, and you will be first, definitely, when we can restart to travel. Definitely, we set up everything. That is for sure. Thank you very much.
Thank you.
Meine Damen und Herren, das war Kelly Earle, Vice President Communications für Skeena Resources. Und ich glaube, es ist sehr klar geworden in der Präsentation, sind wirklich Hammerprojekte. Eskay Creek, die Snip-Mine und auch GJ wird zwar verkauft für 7,5 Millionen, aber egal, das Geld kommt rein und sie haben 33 Millionen gerade eben aufgenommen, haben also gut 40, 50 Millionen, wenn im Juni auch noch die Warrants ausgelöst werden, in der Kasse für die Vormachbarkeitsstudie, genannt Pre-Feasibility, ist also wirklich genug Geld da und unter dem Eindruck der steigenden Goldpreise, auch wenn es vielleicht noch mal kurz unter die 1700 geht, ich bleibe dabei, wir werden nächstes Jahr weit über $2.000 im Gold sein, ist Skeena Resources absolut erste Wahl, ein Wahnsinnsteam, tolle Firma und wirklich vom Feinsten. In diesem Sinne, vielen herzlichen Dank, bleiben Sie gesund. Das war Skeena Resources für die 7. Deutsche Rohstoffnacht im Rahmen der Invest, virtuell dieses Mal. Ich hoffe, wir sehen uns bald wieder. Auf Wiederschauen. Kelly, thank you very much and bye-bye.
Thank you.
Thank you.